But are we going to see traction in the earnings season as well, considering we're just knocking on the doors come next week and you're going to kickstart earnings first with TCS on Tuesday? Let's chat about exactly that with Jyotivardhan Jaipuria, founder and CEO at Valentis Advisors. He joins us on the show right now. Jyoti, hi, morning. Much anticipated the earnings season this time around because, like
Hi,
we were
morning.
chatting about this morning, nothing has really changed dramatically in the market construct. While globally things are looking quite okay and hunky-dory, at least with the US and the economy, but back home, be it the macro concerns, inflation, crude prices, currency weakness, it's all status quo. Can earnings really bring about that glimmer of hope and finally, snap the markets out of this weakness?
Yeah, so my view is that I'm actually quite optimistic on earnings after a long time. My view is the economy is actually reviving, but at the moment there are macro concerns, so people are not seeing the underlying revival. But if you speak to a host of companies, whether it's steel, whether it's autos, CV, capital goods, everyone's seeing a revival in demand. So there is demand in the economy. I think earnings will be good this quarter. Earnings will be good for the next 2-3 years. So my view is after 9-10 years from 2008 to 2017, earnings have grown only 50%, which is less than 4% compounded average. I think the next 3-4 years we are probably going to see like a 15% average compounded earnings growth coming through.
Right. But how realistic is the chance that we will be able to deliver that earnings growth? Because a large part of the returns have already been made in 2017 and 2018 so far has been a nothing sort of a year.
Yeah, see, one is earnings, one is the market. So if you see the market, the last 3-4 years, we've seen no earnings come through, but the markets have gone up only because there's been like a valuation re-rating. What we are seeing this year is probably like market catching its breath because, valuations had moved up too much. So, we are seeing a lot of basically valuation coming off mainly because we have seen like no change in the market. So 6 months of earnings probably have led to valuations coming off of it. It has been in some sense, I call it a two-tier market because if you see the large caps, if you see the Nifty companies, there's been hardly any drop in prices. So the Nifty is, up 1% for the year. But if you see the small caps and the mid caps are down 15% and the small caps are down 20. So that's why, the lot of the price correction has come in. It's been more like a time correction in Nifty. And I think this probably continues for the next 6 months also. So effectively the whole of 2018 will be a year of consolidation where we see, the sharp valuation increase we've seen over the last 3 years getting adjusted with largely price corrections and time corrections. But beyond that, the next 2-3 years, I think markets will give return just based on the earnings growth we get.
What is the expectation from this earnings? Is it going to be more concentrated in nature or more of a linear recovery, broad-based one, which is going to play out?
So I think it will be a lot of it will be broad-based, but broad-based more into the domestic sectors. Essentially, the whole theme is there's been no capex for a long time. So what we are starting to see is utilization levels are picking up in the industry. And so in most sectors, we are seeing capacity utilizations have gone up over the last couple of years. They will go up in the next couple of years. And because of that, you'll get a huge operating leverage play out. So, I think you'll see sharp earnings recovery in sectors like industrial, capital goods. You'll see it in autos. You'll see it in the banks now because, a lot of the NPL provisioning has been quite sharp in the last 3 years. And that is behind us. So, over the next 2-3 years, the NPL provisioning will be much less than what we saw in the last 3 years. And that will drive the earnings growth in the banks.
Okay. Jyoti, is it time to look out for IT and pharma in a conclusive way?
So, IT pharma is something which is more like what I call the next 6-month call because, while this is a 3-year story where earnings will play out, the next 6 months, there are macro concerns. There'll be worry about inflation going up more because of the MSP price increases. There'll probably be some rate increases. And we have seen, the currency depreciate. So basically, stocks like a sector like IT and pharma where, they benefit from the currency depreciation, that will do well over the next 6 months. But over the 3 years view, my view would be I would not be very bullish in IT and pharma.
Okay, fair point. Jyoti, you said that it is going to be the more domestic consumption-led stories which are going to do well. So what is it that we are likely to hear from autos, for instance? Because within autos, what you're seeing is, again, it's not a broad-based recovery. There is a Tata Motors which has a both domestic as well as global story attached to it, or for that matter an M&M which is largely more rural focused, although what we're seeing from the month-on-month sales data is that it seems to be a very strong recovery in place. And then, there is that other concern that what do you do with an Eicher or a Maruti which are already trading at such peak valuations? So how is it that you're going to, put all these pieces together when it comes to the auto sector in particular?
Yes, so in general, just if you look at demand and not the stock prices, then in general, all auto segments are doing well. The segments which I prefer within the auto space are the tractors and the commercial vehicles. So I think that's where the strongest recovery will come. That's why we are seeing a lot of demand. In fact, now we are hearing stuff like, okay, I have demand, but I don't have stock to sell. And so, those are the areas which will do well. Now, obviously, you want to play, this is a domestic demand. So you want to play companies which are more domestically inclined in tractors, more domestically inclined in commercial vehicles. And those are the things which will see strong earnings growth over the next 1 year, and that's where you can make money.
Okay. How are you looking at the rural theme in the market? Where is your conviction building to capture the upside of rural demand? I mean, we are seeing a fairly decent monsoon, so one would believe that offtake would also increase in the upcoming festive season.
Yeah, so rural is, at least from now to the election, rural will be the focus for government. We've seen like massive MSP price increases, which is like the highest it's been in the tenure of the BJP government. You have so far the decent monsoon, maybe not too great but not too bad. So I think we will see rural do well over the course of the next 1 year, and that's where, like I said, tractors will do well, even two-wheelers will benefit from the rural recovery. The other segment we like is, the agrochemicals within the rural space. I think that's the other part which will benefit from the increase in, rural spending going up. Some of the consumer names will benefit, but I find the valuations very pricey, so we've not really been buying into those names.
Fair point. Jyoti, where do you sense that there could continue to be disappointment? I know you've dissected already that it's going to be the more domestic, inward-looking stories which are going to perform well. But do you think anything to do with a global color in that sense, or a global flavor in the balance sheets is where the underperformance would be, or would there be other stories as well wherein you will not really see a meaningful or a material earnings recovery play out?
Yes, so partly it is, even if you have recovery, there could be competitive pressures which stop earnings from really improving. So one classic example probably is the telecom space, where we've seen for the last 12-18 months there is demand. So demand is going up, data demand is going up, but because competition is high, you're not seeing it really in terms of bottom line. You're not seeing it in your operating profits, because competitive pressure is forcing you to keep prices low. Again, if you look at cement, it's something which I like as a longer term story. I think the market's been quite positive on it, but we've not seen pricing pressure come through, because just the sheer capacity which is there is somebody who ends up undercutting the price, and so pricing power has not come in. Here, of course, probably over the next 12-18 months we should see some pricing power, but in the near term there is still the question mark on pricing in telecom. So though there is demand, there are sectors where the competitive pressure is high, and because of that you don't really see that much pricing power coming through.
Jyoti, I don't want to put you in a spot, but I have to ask you about what you make of Reliance's strategy with RelJio. I know you're saying avoid the entire telecom sector, but maybe there's a case with the disruption that Reliance is causing to look at the profit matrix in a completely new light.
So, it's not just telecom, but if we see the whole ecosphere, there is a new player who's come in, who's, got the muscle, and he's got a longer term vision. So we're seeing it in telecom. We've seen like the whole dynamics change in telecom, right? Effectively now, data is what everybody's paying for, and voice is something you're getting actually for whatever, close to free. The other segment where you'll start seeing a lot of this happen now is in broadband, because you'll probably see broadband becoming much cheaper in India. So essentially that whole data part of India will keep getting cheaper and cheaper. I think it will be more easily available. You're going to get faster speed, and probably you'll get stuff cheaper.
Yeah, but here's the thing. I keep getting asked when I talk about the markets at 4 p.m. every day on Facebook, when we do our Facebook Live, I keep getting asked about whether there would be value in the business if Reliance Industries comes out with a RelGeo IPO. How would that development change valuations in an otherwise beleaguered sector?
Yeah, we can't really talk on specific stocks, but essentially this business is a business where the fixed costs are your costs. There's hardly any variable costs. So over the next 2-3 years, what I envisage is that, like if you look at telecom, the number of players in the industry will shrink. We'll probably end up with a market which is divided into 2-3 players, and after that, every incremental rupee which they get goes straight to their bottom line. So there's a lot of operating leverage in the business, and once consolidation in the industry happens, then the remaining 3 players are probably going to make a lot of money.
Jyoti, we'll leave it at that. Thank you so much for taking the time out and chatting with us and giving us a flavor on what you're expecting from the earnings this time.